topic of this session is unlocking grid investment to stimulate interconnectivity. Interconnectivity on the African continent is not a novel concept. It's been part of the agenda for quite some time. The dream of having one single electricity system from the Cape to the Cairo is something that has been repeatedly spoken about. And I think the agreed consensus is that having one interconnected grid would push the goal for reliable, efficient, and cost-effective, an African future that is reliable, that's efficient, and that's cost-effective. And a lot of progress has been made around connecting regions and connecting countries per se, both from a policy perspective and also from a practical project pipeline perspective. Andrew, you're an entrepreneur in the Zambian distribution and transmission space. Could you just elaborate on the private participation in the, not just transmission, but the interconnector space in Zambia and in the SADC region?
Yeah, thank you very much. As stated, my name is Andrew Kamanga from NorthWestern Energy Corporation. We run the first private electricity distribution company in Zambia called NorthWestern Energy Corporation. We service the mine townships in the Northwest, namely in Solwezi, Lumwana, and Kalumbila. As part of our participation in the Zambian power sector, we obviously have invested in the distribution network. The market has been opened up. We do have a number of IPPs. We have a number of transmission companies such as CEC, and we still have 𝐏𝐳𝐠, the national utility. And of course, the market is regulated by 𝐂𝐚𝐬𝐵, and obviously, we are connected to the Southern African power pool. It's obviously not easy as a private investor to participate in the power sector, simply because the power sector, as you know, is of a long-term nature. It comes with its own peculiar challenges, particularly when it comes to project financing. However, we've been able to operate in the last 17 years. We've seen a lot of changes in the market. Even as recent as a few years ago, the government introduced the open access regime to ensure that power is able to be moved by those who have it. We've seen the introduction of power traders who've also come into the market to fill up the gap. So where we sit as Zambia, I think the market is supported by both public as well as private sector. But the key issue still remains that the focus is on generation. However, we are likely to have a challenge when it comes to transmission, because the transmission network may create its own bottleneck. And I think this is where the opportunities could lie when we look at interconnectivity. Two private interconnection projects are underway. There's the Kalumbila Kolwezi, as well as CEC doing another interconnection into DRC, and also the Zambia-Tanzania interconnector, which is going to be the route out into the Eastern African connection, so that we get connected to the Eastern African power pool. Thank you.
From the private sector perspective, what, in your view, needs to be done to structure bankable interconnector projects?
Yeah, thank you very much. I think for private sector to get involved in transmission projects, especially cross-border interconnection, it obviously has to have a combination of essentially two elements. You need to have the off-taker, which means you have the power readily available, and then the tariff itself needs to be attractive enough to assure bankability. So for the private sector, the challenge will always be that you need to have a project which is able to pay back, because as you would expect with transmission projects, they are obviously of a long-term nature. Yes, my colleague from Zimbabwe here mentioned that they were facilitating the transfer of power. Obviously, under the current arrangement through the Southern African Power Pool, we do have wheeling arrangements, which obviously determine what the wheeling charges will be. But ultimately, if a private investor is going to put up the transmission line, they have to be assured that they will get a return. And that is obviously structured under what the tariff will be when it comes to the power purchase agreement or bulk supply agreement agreed between the developer of the transmission line as well as the consumer of that power that will be wheeled through. So that combination is very critical. But also when it comes to interconnections between countries, we obviously have to be alive to the prerequisites, which obviously will apply in the two countries. For instance, you need to ensure that the �W𝐴 is guaranteed, the land access is given on both ends of the line, because you can't just put up a line without adhering to the requirements between the two countries. But what is also comforting is that with the coming in of the regulators, we also have regulation across countries, which basically gives the comfort, because once you are licensed, your license condition will speak to the expectations, and that will also provide assurance and predictability as well as certainty to the bankers that everything has been ticked off. You also have issues around environmental impact assessment, which come into play, because the whole project concept is a combination of several factors. But the long and short end of it, for a private transmission company to succeed, the power has to be there, the tariff has to be right, and of course, the bankers will be able to support the project.
Just articulate what, in your view, needs to be done, because we've had these interconnector projects, in the pipeline for quite some time. CSIs have been done, feasibility studies have been done. The regional power pools are looking for ways to finance these projects for cheaper. But we're still not there. We're still talking about the pipeline. So in your view, starting with Andrew, what needs to be done to accelerate the pace at which we're going?
Yeah, thank you very much. As I stated earlier in my opening remarks, I think we as Zambia have set the ball rolling with the open access, which obviously has allowed the moving away from a single market, a single buyer market, to an open market access. And basically what the power trading has done, it has been able to demonstrate that the tariffs can find or move as quickly as possible to what Norman mentioned, which is essentially cost reflectivity. So if you can get tariffs moving quickly to cost reflective, then the bankability is assured. Now, to be able to get to that stage, of course, power trading is short-term, but investing in transmission networks is long-term. And I think this is where we now have to get the policymakers, the governments, to be able to move a little bit faster and ensure that the tariffs that are guaranteed in the market are of a long-term nature. And this is where the regulators will also come into play. So at the end of the day, like everything else, when you have a shortage, the price will be determined by the demand that's available. So much as we may be looking at just the demand and supply, we also have to be mindful about the affordability. And I think this is where the issue of energy access comes into play. I think the Mission 300 is also speaking to ensuring that within the continent we get as many people connected to power. Of course, at the end of the day, we have to balance between the tariff, the investment, as well as access. What is the ultimate is obviously the fact that power needs to be given. Of course, it's not cheap, and this is where governments, to some extent, will have to start thinking about how you make it affordable. You bring in incentives such as tax breaks to the developers to make the project a little bit bankable. So there are so many ways in which you can still get the projects to be viable, especially on the transmission side. Thank you.
I'll stay with you just for one more question. For Zambia, I think merchant lines have taken the lead on the structure of, not just local transmission, but also interconnectors as well. Well, there's also what is perceived as merchant light, where, yes, the project is banked on the balance sheet of an anchor of an anchor off-taker, which is private, but you have some bit of government intervention. Should this be the model that we're looking at, or do you anticipate that there's going to be different models of private participation that come in, and not just in Zambia, I think just in SADC? Is the merchant line what it's supposed to be, or are we going to see other sort of structures? Should we be considering other sort of structures?
Well, I think, as I stated earlier, what is key is that, for instance, what has driven even the tariffs to be high is that the mining consumers are able to afford a higher tariff, because it obviously is a key input into the production. On the other side, the price of copper has equally gone up to a point where the mining companies can justify paying a little bit more to sustain the production and get more copper output out. But at the end of the day, we obviously have to design different tariffs for the different consumers. For other industries, it could be beneficiation. You could have a different model. For the residentials, this is where the challenge is, because if you make it too expensive, the consumption may not happen. But of course, even with the residential consumers, there has to come a point where you also have to encourage energy efficiency, where they reduce the wastage of power and consume only that they can afford to pay. So it's a balancing act which ultimately rests with the regulator, because they are the ones who set the prices, especially on the residentials. But on the commercials, the industrials, I think these are open and available to negotiation. And over a long term, you could structure and ensure that the project is bankable if you've got a big consumer at the end of